Welcome. Yeah, thank you again for having me. Today, we'll go over small business taxes in BC and how to digitize the process. We'll cover some fundamentals. This is my first time presenting for the V2RF Foundation. I'm not familiar with the crowd. So we'll start from the basics with small business taxes. I won't get into too much information. And we'll also do a little bit of a QuickBooks demo to show you how what I'm speaking about connects with the digital side of accounting. So yeah, my name is Chad. I'm one of the co-founders and the tax lead for Purpose CPA. We're a digital first cloud-based accountancy firm. I'm based here in Burnaby. My partner is based in Richmond, but we and our team is distributed around the Lower Mainland, and we work primarily in the cloud. We are a impact-focused organization, and that is definitely one of the draws I had when I had a chance to meet Winnie earlier this year. So it's very, very important and to myself that I can come and present and talk to the group at V2RF. I primarily focus on the commercial, residential real estate accounting, tax and advisory. I also do support other businesses and business owners in different sectors as well too. We have in retail, we have in also in manufacturing, we have in professional services such as healthcare providers, lawyers, and the such. Right, let's jump into it. Quick agenda for today. We're going to be talking about GST, sales tax codes, some of the tips that we have, payroll taxes, other payroll premiums, some of the base things for business owners, or better yet, for people that are thinking about starting their business or understanding what are some of the major taxes that goes into running your business. Won't get into income taxes. Income taxes is really straightforward. You have your income and your expenses. The taxes that are more complex can be in the GST and payroll taxes. So I'll get into that for today. But happy to talk about income taxes and other forms of compliances that you need to do when running a business. So GST. GST, there are some basic rules. If you're not earning more than $30,000 or generating $30,000 of revenue within about a year's time or 4 consecutive quarters is as part of the requirements, then you don't have to register for a GST account. You don't have to charge GST if your revenues are not above the $30,000. There's more to these rules. So a lot of the what I'm providing you is the basis of it. Really quick and simple rules to look out for, but there's definitely certainly more rules involved here, and we can advise more on those if those situations come up for business owners. So small supplier rule that businesses wonder, should I register for a GST account? Think about the $30,000 amount. If you think that you will be generating more than $30,000 in the next 6 months, or even the next 12 months or so, register for a GST account. So what does GST apply to? That's called taxable supply. And GST can apply to pretty much everything. There are certain exceptions, and as well as zero-rated supplies, things that are noted down in the GST or the excess tax act. But we'll get into that a little bit later. If you're selling a service, like we sell our services to provide bookkeeping or tax advisory, we apply GST. If a person is selling a good, generally you're going to be applying GST with PST. And then we'll get into some exceptions where sales taxes will not apply. So what are these exceptions? For GST, when it comes to things such as residential housing, if you're going to be renting from renting your place of living, you're going to notice that you're not going to be charged GST for it. Residential housing leases and rent are exempt from GST. Most medical services as well, and childcare services. When you pay for childcare services, you're going to find that you will not be charged for GST for somebody taking care of your children. And for the people that are running a business and you have exempt supplies or you're providing exempt services, there's a sales tax code. It's E, naturally, for exempt. When those situations come up, when you're going to be invoicing your client, let's say you're providing childcare services and you're going to be invoicing your client for X amount of hours, let's say it's $500 for the month. Your accounting system would want to know what sales tax code do you provide, and E, for example, would be the one. The other part of the Excise Tax Act for GST is what's called zero-rated. And zero-rated are supplies and property and services that are taxable at the rate of 0%. You'll notice that when you go buy groceries, if you look at your bill, you're going to notice that your GST is very small or likely zero. And because if you're buying all groceries, milk, bread, vegetables, all the necessities for life, you're going to find that it's going to be zero. So if you're in that type of business of if it's a small grocers and you're selling that, your sales tax code for those items that you sell is a Z for zero rated, or anything that is zero rated for is 0%. Prescription drugs and drug dispensing services are also one of those ones. There are more, of course, and we can advise on what those are, as well as the CRA has a guide generally that will list out which ones are zero rated. So GST, in terms of filing frequency, most of the time, it depends on the total amount of taxable supplies that you are generating in a year. And these are the levels that you have. If it's below $1.5 million, it's an annual. You're going to be filing at least on an annual basis. You can elect for monthly or quarterly. If you're generating more than that, from 1.5 million up to 6, it's going to be quarterly. If you're generating above $6 million, then you'll be filing on a monthly basis. And the GST is due before the end of the following month. So right now we're in August, and if I was running a business and I was generating more than $6 million in total annual revenues, I would be filing for July before the end of August. And then there's also installment payments. When you're generating enough of net taxes, if it's more than $3,000 in a prior period, there's going to be a requirement CRA is going to want their money first. And when you start to generate income taxes that are quite high, you're going to start to see that a CRA will send a letter asking for installments. There we go. Sorry about that. All right. So I'm going to quickly show you what that looks like on QuickBooks Online. We work with primarily QuickBooks Online. I've been working on the QuickBooks platform for a little over 10 years now, from the desktop side over to the online side. Really familiar with both platforms. On QuickBooks Online, they have a feature called Taxes. And this is a demo account, so a fictitious company. And this system right here helps us gather all the numbers in order to file for the GST. And if set up correctly, then we'll be able to identify how much revenue you had in a particular reporting period, how much are the GST collectible, and these are identified by the line numbers, the same line numbers that you'll see when you're filing for that GST on CRA site. There's a couple ways to do it. QuickBooks does not file the GST for you. What QuickBooks will do is it will tabulate the numbers for GST for you in order for you to then do the filing. There are two ways that I find is the fastest way to file for GST. Is online business banking. Major banks such as CIBC, BMO, RBC, speak to your account manager. If you don't know about it, they'll be able to show you how to access it. Sometimes you may have to add another module and pay a little bit, but it's not that expensive, and it makes filing a lot more easier, as well as making the payment. The other way for filing, and the easiest way too, is through the CRA My Business account. Logging in, doing the filing. You can also initiate a pre-authorized debit from the CRA system to make the payment for you after you do the filing. There are penalties, of course, and the CRA rates for penalties for late filing. It's up there now. It moved up there with the cost of living and CPI. I think it's about 7% or 8% on an annual basis. So definitely try to allocate enough money to make the filings. But here's a sales tax center. One thing I have to note about the sales tax center, to be able to use it correctly, it requires the people that are creating the transactions to code every single line of the transactions and to use the correct sales taxes correctly. And then you'll be able to tabulate the amount of sales taxes that you have to pay or potentially get back because of the ITC, which is the income tax credit for things that you purchase. So when you sell something, you collect GST from your customers and you have to remit that. But as a GST registrant, if you buy something and you pay GST, the net amount of GST you have to pay goes down with the purchases that you have to make for business-related transactions. But they all require that they are entered with the correct sales tax code. Here, these are taxable items with an HST and Ontario sales tax, which is the GST and PST. But I can just as easily create a GST code for 5% if it was in BC. And that was all the sales tax there was. And here are the sales tax code that I mentioned earlier, exempt and zero rated. And a huge reason of understanding the sales taxes in a better way, so that you're coding and transacting your in a compliant way. Okay, so QuickBooks makes it easy to be able to do that, but coding your transactions correctly will give you the right summaries for your returns. So I prepare returns. Let's say it's the end of the period, and it will tabulate all those there for you. If it's done correctly, your total numbers are here, and these are the same numbers that you can use when you're filing for that GST. So some of the tips based on what we learned, register a GST account as you start your business, even if you're not able to make any sales until much later, because there are likely things that you're needing to purchase for the business to be able to eventually start a business. And the things that you purchase, you'll have to pay GST. And when you pay GST, you get a GST credit. So you're likely able to receive some GST monies or monies back, or deduct from the GSTs that you owe when you eventually make sales. So registering for a GST account right away after you start a business can be advantageous. There's a small little known rule for GST on meals and entertainment expenses. For some business owners and also some accountants that are out there, when you're paying for meals and expenses, you can only write off half of those expenses. Let's say you spend $1,000 over a month. Only $500 is tax deductible. But so is the GST. the GST that you pay on those meals and expenses, usually 5%, is only half of it is tax deductible, or it becomes a GST ITC. So when we service our clients, we create a custom 2.5% GST tax code for those transactions, for those meals and expenses that the company has to pay. So that's one there that will help you get on side with GST rules. Okay. I don't have too much time, so I'm working through this quite fast. Yeah, if you guys have any questions before I move on to the next section, I'll jump into payroll taxes. Do drop it in the chat, and we'll go from there. All right, payroll taxes. Payroll taxes, of course, when you're going to be paying, you're going to have to think about payroll taxes, even if there's no employees. If you have no other staff in the business, and you yourself as the owner, can also be an employee of your own company. And so you'll have to think about payroll taxes. I've organized it this way to help people think about payroll taxes in two sides. And payroll taxes, as an employer, when you have a staff member, you're paying them wages or salary, the employer has to contribute these amounts. These are 2023 amounts into CPP, and also for employment insurance as an employer hiring a staff member. As an employee, when you earn money, the employee will be deducted CPP and EI. So as they earn money, some will be held back so that they can contribute into CPP and EI. I'll get into a little bit about some exemptions there. The employee also will be deducted for income taxes, and it depends on how much they're earning and the frequency of when they're earning. CRA has these calculators online that you can use for free to be able to calculate what that is. If you're doing payroll manually, meaning that you are giving somebody $1,000 for their 2 weeks of work. Maybe that's a little bit low. Let's say an X amount of money, and you need to figure out how much to withhold in order to meet the requirements of CPP and EI and income taxes. Use the online calculators. We highly recommend companies use outsourced payroll systems. I'll get into that in a little bit here to be able to do it. But if you don't want to do that, there's ways that you can do it for free online using the CRA calculators. Okay, remittances. Well, I'll touch upon that. When you process payroll and hold back the money from the employee's salary or wages, you then have to remit it to the CRA, and there's a process for them to do it either through their online system or through a payroll processor, which we highly recommend. These are the total amounts. I won't get into all those the amounts there. It's available online, and if we can get a copy of the presentation, that's there for you. At year end is a big process too. At year end, T4s are necessary. Employees have to report for their own personal taxes, and employers have until the end of February to produce all the T4s, make sure they're all correct, reconcile it, and submit it to the employees, and as well as submit it over to CRA. So quite a bit of administration responsibility by the employer. Add to that, here in BC, we also have the employer health tax, EHT, for companies, larger companies that are providing total remuneration over $500,000. There are definitely many businesses that meet that, and there are certain rates on to be able to pay. Most payroll systems they don't handle the employer health tax. It's a manual calculation, and to do it in-house or hire an external company such as Next Gen Accounting or Purpose CPA or external accountants to be able to do that, to assist you with that. companies can do it themselves as well. WCB is also another one of those. And WCB is a responsibility and a legal requirement for running a business here in BC. It's even payable even if you don't have any employees. If the owner is taking dividends, for instance, that's a form of pay. And that is a requirement to apply for WCB and remit for premiums here to operate in BC. So quite a bit more on top of the payroll taxes that you have to do. So a couple of payroll systems that we have. We work a lot with QuickBooks Online. QuickBooks does have its own payroll, but the thing is that it doesn't remit to the CRA. And there are some other things. It's a very basic system. We really like WagePoint because it takes care of all the accounting pieces. It's inexpensive and remits everything to the CRA and provide the T4s at year end. It doesn't do EHT or WCB, but it's easy to manage those by your own. There's other features and modules, time and attendance. For companies that these are also other ones, 3 other ones that we liked that may be applicable for some companies, but they don't connect with QuickBooks Online. So the payroll information, you have to punch that into your accounting system, but they take care of remittances to CRA. What I'm trying to get at is the remittances in the CRA. And for the fees that you pay for outsourced payroll functions, it's really small compared to the amount of work and stress to be able to do and calculate all the requirements for payroll. It's just a tremendous amount of work. So before I get to the pro tips, I'll show you guys and anybody. I'll show you a system called WagePoint. There we go. WagePoint is the system that we really like to use because it connects to QuickBooks Online. We process the payroll. It can send all that information over to QuickBooks, and it will do all the remittances to CRA and provide direct deposit to the employees. It's a very simple system. So if you need time cards and time and approvals, you have to add a little bit to it, but it's a great system to start out with to add on to a QuickBooks Online system, WagePoint. And I'll quickly show you WagePoint from the employee's point of view. The employees get their own portal. After you process payroll, people want to know, where do I get my pay stub? And how do I update my payment information or my direct deposit? It's a self-service portal. You can add the employee in WagePoint and they get a notification, they sign on with it, and they have their own portal to be able to download all their T4s, pay stubs, all the things necessary to do. So it's and these days, payroll with the systems that's available out there can be very simple. And relatively inexpensive and a lot more self-managed these days. So highly recommend looking into systems like that. All right, let's jump back in. So some of the tips that I have, shareholders and related employees for companies, you might heard that owners of a company are EI exempt. They are. And also related employees, there could be their adult children, it could be even adopted children or adopted relatives, adopted people working in the company. And they are also EI exempt, meaning that the company does not have to pay into EI if it wants to, but the company can opt into it if it would like. You can hire family members to work in your business, but you have to pay them a reasonable amount. So if you hire somebody that is a office manager, you won't be able to pay the office manager $200,000, $300,000, $400,000 because there's a reasonable amount rule that is applied by CRA. So you have to think about that. I would say owners, one of the things that a lot of businesses, when they start out, they ask, so I'm going to take dividends. And we advise, well, if you're just starting out, you won't have enough monies in your company to provide what's called retained earnings that you can draw upon as owners for dividends. We actually would advise most of the times that owners start taking pay from their companies as a salary. It doesn't have to be a big one; it can be a small one. Salaries are tax deductible. And yes, they are also RSP eligible too. So the salaries that I take in, you can also contribute it into RSPs to manage the amount of taxes that you have to pay. So dividends are not necessarily better. They're not tax deductible. Yes, a company does save about 6% in CPP by paying dividends. But dividends, a limitation with dividends is that you can't contribute into an RSP and receive a tax refund, and it doesn't add to a RSP contribution limit fund. So some things to think about there. So I wanted to talk about all this payroll because the summary of that is that payroll is very complex, extremely time sensitive. I've seen a lot of people when they process payroll, they have a short window to be able to process it in time so that the direct deposit makes it into your employee's account by Friday, Thursday, or Friday. Very time sensitive, and it's very hard to get that. And therefore, it's an administratively heavy process. It's for a lot of small businesses, check out a outsourced payroll provider, much like the ones that I've just showed you back there, to be able to make it a lot more easier on the business and the business owners. CRA requirements are very administrative heavy with high penalty risks. Technology and outsourcing are worth every penny is the short and sweet of my message today. So that is it for my main presentation there. I quickly want to just provide a little bit of introduction to our business, Purpose CPA. We provide advisory, which is, let's say, financial coaching, doing some business planning, financial analysis on the business. Chad, should I purchase 5 more vehicles to generate and try to sell to this new area of the business? Let's run some numbers to be able to do that. Technology advisory, we are a Canada Digital Adoption Program digital advisor, and we do conversions for accounting systems, everything in and around accounting systems and finance systems, CRMs and HRS and things like that. We help advise as well as design and implement for those systems. Accounting and tax, yes, we have a component which is a full service accounting and tax, taking from bookkeeping all the way to year-end T2 filings, payrolls, sales tax filings. And lastly, the bookkeeping part is getting it all in place. We do offer monthly bookkeeping services, much like Winnie and Quinky and her team. And that is it. I'll bring it on back there. I have a couple of resources here, and I'll open it up. I know I've gone through it really quickly there, so there are probably some questions. Feel free to ask away.
Thank you, Chad. I have a question for you. Collected from some clients, and they normally always asking us. And so mainly, if you said the company has to be earning 30,000, before they're required to do the GST registration. What is your recommendations for somebody under the 30,000 when they just starting business, but they know in the future they're going to be growing over that after 1 year or 2 years? What is your recommendation for the clients like this?
Yeah. I think anybody that is going into the business should register for GST, even if they're only generating below that $30,000 within the sort of a 1 year period. I feel that it legitimizes the business. I think it shows to customers that you are a legitimate business, and that part I think it also triggers a mental shift for the business owner that, yes, I am a business and I'm trying to run it as the best way and as most compliant way as possible. Um, Immediately, you get access to your GST ITC. If you're not a GST registrant, you're going to be purchasing supplies and anything for the business. You won't be able to access those GST ITCs. So even though you're going to be charging the business, some businesses don't want it to because it's adding 5% to they're fearful that their customers may feel that they don't want to pay the 5%. And I find that then they're not really confident. You have to think about customers. If they're not really confident about that and making that extra 5%, then it's not about the GST. It's more about perhaps your product or services that you have to think about. Is there enough value for them to purchase it, even though that there's a GST 5% GST on it?
Yeah, I feel the same way because we actually run into a client, they're importing a lots of goods from other country, but they didn't realize they have to register GST and they paid a huge amount of GST at the border. But they're not able to claim back because they thought, oh, the first year we're not going to sell 30,000, so we don't register nothing. And then when we starting to look at their finances and realize they ordered like $30,000 stuff from other country. So basically, in that way, they lost that 5% on that 30,000 to as ITC, which is the GST credit the company can claim back. So we saw that as a real example. I believe you probably see some of your clients with the similar type of examples too.
Certainly, they they had to pay for that 5% on the
Mhm.
goods coming in,
Yeah.
and most times businesses will pass it on to the customer,
Mhm.
but they wouldn't be able to pass it on as a GST. They're not a registrant.
Mhm.
So if they purchased and $1,000, they paid $50 for it. That $50 eventually is passed on, and they consider it as revenue. They'll recognize it as revenue.
Mhm.
So absolutely, I think it does make worthwhile if you're going to start a business, register for the GST. I think it really does legitimize it. GST is not a penalty to the business. It shouldn't be seen as a penalty to the business. And if customers are hesitant to pay for it, those are not the customers that I think you'd want. Um, um, there are other ways to try to raise the value of your goods and services and find customers that will have no problem with the GST.
My second question is that there are some new business, many new people wanted to start their self-employed business or incorporate business. But before they incorporated, they probably use their personal credit card, purchase some computers and paying the lawyers to incorporate, as well as they're maybe buying some, business supplies they really need. Those ones maybe before they actually register their GST. So, what is your recommendation for that kind of a situation? For example, they incorporate in August 1st, but actually the owner already paid on their credit card for incorporation to the lawyer, bought some computers, bought some office supplies with the GST in it to set up the office or set up the business. What is your recommendations for that one?
Yeah, certainly. Uh, my recommendation would be to register for GST right when you register for the company. And it's not apparent when you're registering for companies. And depending on if you have legal assistance to help you register for a company, some will be good. Some will mention register for a GST account right away, especially the real estate lawyers. Real estate, when you register for the company, and you're going to be purchasing a lot to be able to build the building that you're trying to sell or eventually build. And you won't be generating that sale until much later on. So real estate lawyers are definitely recommend registering for GST. For even small import-export companies that sell in terms of retail for consumers, register for a GST account. If you're not a GST registrant, you wouldn't be able to ask for a refund of that GST ITC only until after your registration. And so you potentially lose out on that GST ITC.
Can you elaborate a little bit about the CDAP program? Your company is certified because by our knowledge, it's not every company or every advisor will giving that kind of a certification to be qualified to called a CDAP advisor by government. Could you just elaborate a little bit about this program and what is your company and your team can help?
Sure. The Canada Digital Adoption Program, or as Winnie had mentioned, is CDAP. It was born out of the need by the federal government to help businesses adapt to a potential, just in case if another pandemic happens, and really push the whole business environment in Canada forward in terms of digital aptitude and understanding. So this grant has the ability to help businesses figure out what is the best possible solutions to be able to do that. And the federal government is having the businesses to connect with approved and certified digital advisors, such as ourselves, to be able to do that. A lot of businesses may take the inexpensive route. Many will, because it's, they don't want to spend too much. But through studies and understanding, that is usually not the best case. It might give you a little bit of help in the short term, but it may not provide you with the resiliency in case another pandemic happens. So this program, what happens is that for the eligible companies are for-profit companies. So not-for-profits are not eligible. You can apply through the federal government site. If you're generating more than $500,000 in one of the past 3 years, you get to get access up to a $15,000 government grant to connect with a digital advisor to figure out some solutions. They'll go through many things of your business to figure out. Some of the examples that we have is the last one we were looking at is a construction company, $20 million in size. They do all their project management on Excel, and that information is not passed to anywhere else. And then they do all their accounting on QuickBooks Online. Just major disconnect because there's a lot of manual things and duplication of entries and things like that. So we looked at 3 potential project management systems for them, from cheaper, middle range, over to most expensive. And that's what the program gives you. It gives you options. For digital advisors, we're indifferent to what a business wants. All digital advisors should provide unbiased recommendations. And it's a great way to figure out what's the best route for businesses. After doing the report and getting your $15,000 grant back, you pay your digital advisors, and then you get up to $15,000 back after you submit it. After you submit that report, businesses have access to a 5-year interest-free loan up to $100,000, depending on the size of the business, to be able to implement the stuff, whether it be computer equipment or a new project management system. There are a lot of businesses that are doing this. I would say it is a competitive advantage for businesses that are doing this. I think a lot of businesses are really hesitant. They want to just have the money to be able to purchase their own thing. And there are a lot of businesses that will go through this process to figure out what's the best thing. Of course, having an outside partner work with you who is not in it for anything other than giving you the best possible options. Of course, I feel that those businesses are set up for success over the long run. So this is more about this program. Feel free to contact us to provide you more information about this program. Our contact information, our contact information right there for them. So yeah, thank you so much for presenting that, Winnie.
Thank you very much, Chad. All of our accountant were super busy, and we really, really appreciate that you take the time to share those knowledge. We're going to posting this on the YouTube, and more people can take these as their free information. Because as a professional like you and myself and many of your teams and our team, because our goal is here to give the public or the business owners or entrepreneurs the real life information, basic information for free, and so they can make their own decisions, and if they wanted to do something on their own, or they can engage professionals to help them. I believe we're in the same type of giving back to the community type of how to say attitude. So really, really thank you for your firm also taking this initiation and helping Vision to Reality Foundation, because nobody can do it alone, because we need many organizations can step in to support. And also I wanted to tell everybody, Chad also one of the judges for our May Idea Lab contest. So next year we're going to hosting a better one. So this past May is our first one. So I'm hoping more and more people can join that and share their knowledge. And the good news is we're sending the 3 winners to a venture capital company, and they're just evaluating their business ideas, their business plans, and to see if there's a possibility they can invest in, and helping them find the fundings and to like bring their dream come true. Thank you.
Yeah, thank you very much for having me, Winnie. And try to present it in a quick and easy way, especially for business owners. Hopefully, there's a couple of. I'm pretty sure that there's a couple of points in there that they can take away. Looking forward to working with more businesses to really help elevate them. Didn't want to create too tax heavy or in terms of numbers and things like that for a business. So thank you again for having me today.